Well, the White House is taking aim at investments in China. President Biden issuing an executive order aimed at preventing Americans from investing in some Chinese companies. The move is just the latest push by the administration to slow development of critical technologies in the world's second largest economy. Joining us now is Edith Yeung, Race Capital General Partner. Edith, this is a space that you know quite well. The administration has said, at least the senior official has said, that this is all about national security. It's not about targeting the economy. How do you view this?
I think as an early stage investor to focus on AI and software infrastructure, this is a major blow, not only to the Chinese startup ecosystem, but really a major blow to the US venture industry. The way that I look at it is, Washington is not only trying to decouple the US-China tech ecosystem, now it's trying to decouple the US and China venture capital ecosystem. And I think this have gone too far. Because in some sense, U.S. started in 1993, being Excel IDG, being the first venture capitalist that started investing in China tech. Silicon Valley really helped shape the lay of the land for how the whole Chinese tech and ecosystem work. And we wanted to continue to have that influence. And I don't think Washington should limit our freedom in investing. And this is really going to hurt capital market long-term for all US investors, not just venture capitalists or not just to help curb any tech ecosystem.
One of those largest VC firms, Sequoia China, recently made headlines by spinning off their Chinese counterpart, Sequoia China. As somebody who's in the VC space, how are you now thinking about investments into China?
I think it's very, very disappointing because in some sense, capital market or venture capital really should not get dragged into politics. But unfortunately, for the past 3 years, including myself, I really cannot even visit China because of COVID, make it very, very difficult to invest, and not let alone that it's very unpredictable in terms of tech policy for both sides. I think, started with the Trump administration, they gave a very, very hard time to companies like Micron and NVIDIA or Qualcomm to sell to Chinese companies, and now is even making investor to have a very, very hard time to participate in the vibrant Chinese economy. Really should have nothing to do with what the administration trying to do. So in some sense, I think it's very disappointing and make it harder and harder and setting a chilling effect for investors like myself to continue to invest in Chinese startup founders.
Having said that, how big of an impact is this going to have on Chinese startups? And we've been hearing for months now about a significant pullback in foreign direct investments. I mean, how much money is actually flowing from the U.S. into some of these companies developing critical technologies right now in China?
We're talking about billions like in the past. And if you think about it, as I mentioned earlier, U.S. Silicon Valley investor really started investing in China for the past 30 years. We're talking about some of the best companies in the world, including, the ByteDance, which is TikTok, Alibaba, and Tencent. It all have U.S. influence and U.S. capital in this. So in many sense, it's not just about billions of dollars being invested, it's really trillions of dollars longer term in terms of economic impact that U.S. investors have influence in both U.S. and China. So in that sense, it's very unfortunate what's going on, and it's not going to be making it any easier for U.S. investors to participate in Chinese market, unfortunately.
Take the executive order that the Biden administration is signing sort of out of the mix. When you think about from a strictly return standpoint, is that still a good bet, investing in some of these Chinese companies, particularly when you consider what's happening from an economic front, the macro conditions, but also the regulatory front and what's happening there? Is the return still there when you compare it to where things were several years ago?
It's very, very hard to say. There's a lot of macro number that predicted. Hopefully, with now China being opened up, it will make a difference in terms of economic growth. And unfortunately, it doesn't seem like the growth is really up to par and what's being expected. I think from a investor point of view, the most important thing for us to think about is really about in addition to the economy itself, which I do think that after all, China is the number 2 largest market in terms of GDP in the world. We should not ignore that particular market. But more importantly, what we need to pay attention as an investor is really about the exit strategy. So now if more and more regulatory or compliance being enforced for Chinese companies being listed in the US, and now the exit path is only going to be China M&A or listing IPO on Chinese mainland soil, it will actually make it a lot more difficult in terms of return for US investors to participate.
What does it ultimately mean for the tech climate here in the US? I mean, it's been years since Chinese investors have actually been able to take big stake in U.S. companies, largely because of the CFIUS reviews that have been happening there. But this is the money has been flowing in both directions, and you see that what could happen over in China. But what's the impact in the U.S. too?
It's really unfortunate, Akiko. I think we met many years ago. We often talks about. Is not only China is learning from the US, in many sense, a lot of founders also learning from the Chinese ecosystem, particularly with fintech. Just look at what Alipay or WeChat Pay have done. That is really the future of fintech. And if you wanted to see how it sort of should look like, you go to China. So essentially, with all the restriction, is really sort of limiting our own learning as well. I think the world is big. It's not only about trying to to keep the US supremacy of tech. There are a lot of things that we can learn from each other. And also to think about it, right? Like NVIDIA, Apple, or even Starbucks or Nike, they are like China is the number 2 market in the world. And often they set up a lot of joint venture and also local Chinese entity that they invest themselves. So does that mean that we're going to also limit our own American brands into China market? Not alone that it's very, very difficult to predict what will Beijing do to retaliate with what we have done so far. So that's remained to be seen.
Grace Capital's Edith Yeung, always good to get your perspective. Really appreciate you joining us today.
Thank you, Akiko.